Have you ever wondered how you can generate income using options? Well, let's unlock the mystery. At the heart of it, options are simply contracts. They grant the buyer the right, but importantly, not the obligation, to buy or sell an underlying asset at a predetermined price, all before a specified date. This financial instrument comes in two flavors: calls and puts. A call option gives you the right to buy an asset, while a put option gives you the right to sell an asset. The beauty of options lies in their flexibility. They can be used as a hedge against potential losses in your portfolio or as a tool to generate income. And that's precisely what we're here to explore. How can these contracts, these calls and puts, be transformed into a steady stream of income? So now that we understand what options are, let's dive into how we can use them to generate income. First, we'll explore the strategy of selling covered calls. This strategy is a popular choice among many investors looking for ways to generate income from their existing portfolios. So, what does selling covered calls actually mean? Imagine that you already own an asset, like a stock. You can sell a call option on that asset. This gives someone else the right to buy your asset at a predetermined price known as the strike price, within a specified period. In exchange for selling this right, you receive an upfront payment or premium. However, there's a catch. If the asset's price rises above the strike price before the option expires, you may be obligated to sell your asset at the strike price, possibly missing out on some potential gains. But if the price stays below the strike price, you keep the premium and the asset. So selling covered calls can be a great way to generate extra income from assets you already own. But what if you don't own any assets? Well, that brings us to our next strategy, selling cash-secured puts. Now, this is a strategy where you, as an investor, sell put options while maintaining enough cash to purchase the underlying asset, should its price fall below the strike price. Let's break it down. When you sell a put option, you're essentially selling someone else the right to sell a stock to you at a predetermined price known as the strike price. Your potential profit? The premium or payment you receive for selling the put. Now, you might be wondering, why would I want to buy a stock if its price is falling? Well, if you're bullish on the stock and believe its price will rise in the long run, this could be a fantastic opportunity to purchase it at a discounted price. Selling cash-secured puts can be a smart way to generate income, especially if you're comfortable with the idea of buying the underlying asset at the strike price. Now, it's important to remember that using options for income generation isn't without its risks. For instance, selling covered calls carries the risk of having to sell an asset that has appreciated in value. Imagine holding on to a golden goose only to sell it just as it starts laying golden eggs. Not exactly ideal, is it? On the flip side, selling cash-secured puts brings the risk of having to buy an asset that's depreciated in value. It's like buying a car only to see it rust away in your garage. However, it's not all doom and gloom. The income generated from the premium can offset these risks to some extent. It's like getting paid to wait for the right moment to buy or sell. And with careful strategy and a bit of luck, these risks can be managed quite effectively. So while there are risks involved, the potential rewards can make options an attractive income-generating strategy. So we've learned that options can be a powerful tool for generating income. Let's recap what we've covered today. We delved into the strategic world of selling covered calls, a strategy that allows you to earn income from the stocks you already own. We also explored the terrain of selling cash-secured puts, another approach that could potentially generate income and help you acquire stocks at a discount. Remember, while these strategies can provide a steady stream of income, they also come with certain risks. It's about balancing the potential rewards against the risks involved. The key is to manage risk wisely, and these strategies can be a valuable addition to your financial arsenal. If you found this video helpful, please give it a thumbs up, share it with your friends, and subscribe to our channel for more financial tips and insights. And as always, feel free to leave any questions or comments below. Thanks for watching and happy investing.